Tonight, I want to take a look at what really creates big opportunities in stocks. Right now, people are kind of infatuated with stocks like Facebook, Amazon, Netflix, and Google because they're some of the only stocks in the market that are continuing to go higher, and they've had huge runs in 2015. So people get attracted to stocks that they're familiar with that make big moves, and they tend to want to herd and not miss out on fantastic gains. But unfortunately, a lot of times what they're doing is they're looking in the rearview mirror and they're setting themselves up to get slaughtered, actually. Um, so looking at this chart of stage analysis, which you can find on my website, nextbigtrade.com, on my stage analysis page, but the best place to buy stocks is after they've completed a stage 4 decline and a stage 1 base, and they're breaking out into a new stage 2 advance. And this is very counterintuitive to where people feel comfortable with buying stocks, because most people tend to want to buy stocks after they've made huge runs and they want to jump on the bandwagon. But in actuality, the best time to buy is when you break out above this long-term moving average, and essentially you're creating a new trend higher, which if you get in early is where you can reap the huge gains. But it's hard to do this because after a long bear market and a sideways grind where people aren't interested in a stock, uh, it's hard to find people that will share your viewpoint and support you and thinking that the new uptrend is beginning. And it's really, you're like a lone wolf. Like you almost have to operate independently and you know basically accept the market's signal that a new trend could be beginning. And as long as you get yourself in early, you're gonna take advantage of what possibly could happen, which is a new bull market. So first thing I want to look at is Amazon.com, because everyone's obsessed with Amazon right now. But let's go back and look at what Amazon's really done over its entire existence. It'll show you how treacherous it is to buy at a top and suffer a massive stage 4 decline, and how the big opportunities are created after these bear markets and after these basing phases. So if you look at back in 1998, when Amazon was basically going to go into the super bull market of the tech bubble, you can see that Amazon, uh, after it IPO'd, which was back here somewhere, it based out for a while and then just started exploding higher, into this new bull move, of the tech bubble. And it actually went up, over 10 times, from in the single digits all the way above 100. Now, people were obviously going to be extremely bullish on the stock up here, but look how long it took for it to suffer a major decline in 1999, and then ultimately in the tech bubble top, which happened in the early 2000s. Um, Amazon makes a big top here, but this whole process took 7 months to reach this former high, and then once we collapsed back down, we finally went into a bear market. And we can see that the 30-week moving average started acting as resistance here, and Amazon went into a stage 4 decline. So you can see just from this time window from 1998 to 2001 that how treacherous it was to buy Amazon at the wrong time. If you bought into these peaks where everyone was super bullish and euphoric, you got killed. The only real safe time to buy was when Amazon broke out initially, from a basing phase, and then actually retested the base here and broke out again. That's where you want to buy, not at these parabolic tops. And the only secondary safe times to buy is when it retests the 30-week moving average after the initial breakout. And finally, when it retested it here, this is where it failed to retake the 30-week moving average, which signaled that a new stage 4 decline was beginning. So you can see that Amazon lost, essentially, I think it goes on to lose about 90% of its value as it declines all the way into, as we see in the next chart, I'm going from 2001 all the way into 2004, and we can see that Amazon declined all the way basically back to its IPO level back in 1998. It declined all the way into around $5, which if you got in at 110 and wrote it down to 5, I mean, you just got absolutely decimated. But interestingly enough, after that 90% decline, we start to base out again, and all of a sudden we break out on massive volume above the 30-week moving average once again, and which kicks off another buy signal for Amazon for a new bull market. Then we retest the 30-week, which happens a whole 7 months after the initial breakout. We hold it, and then we keep moving higher. So after the 90% decline, Amazon busted out into another stage 2 advance, which had the stock going up 6 times all the way until late 2003. Now, if we move forward again to showing 2004 to 2009, we can see that after that 2003 top, Amazon declined for 3 straight years, all the way until 2006 once again. So we saw a period where Amazon, after that massive stage 2, went into this more choppy sideways decline, which probably frustrated a lot of people for multiple years, but ultimately that's creates another buying opportunity for Amazon. And what we saw here from 06 to 2007 was a quick bull market where Amazon really blasted higher, leading up until the financial crisis top, where it went up, essentially 3 times in a period of a year, which is quite a massive rise. So, and what ultimately led to the ability for Amazon to do such a massive move in a short period of time was the fact that it just came out of a bear market for multiple years. So again, the best time to buy was, as we're breaking out above the 30-week moving average and then retesting and then breaking out again. And the worst time to buy is when we're massively above the 30-week moving average after we've had such a big advance. But unfortunately, once again, this is where people want to buy, and this is why they get crushed time and time again. So fast forward again, we show the 2009 bottom all the way up until now. And what we can see is that Amazon, after the 2009 financial crisis bottom, went into another stage 2 advance. So it went up a couple years in a row, and then it would consolidate for a while. And from 2011 all the way until early 2012, it finally broke out again. But it didn't, it kind of went sideways for a while, which creates another basing opportunity, like all the way from the actual top in 11 all the way until mid 2013. So almost 2 years where Amazon goes sideways. It breaks out again into another stage 2 advance, and then ultimately topped in early 14. Actually went down quite a bit from 400 to less than 300, which is over a 25% loss into the start of this year. And then Amazon, this little mini bear market created the ability for Amazon to break out early this year and really is the star performer of the stock market of this year. And this new stage 2 advance has been just straight parabolic in between these long consolidations. And Amazon's actually gone on to over double this year in 2015. And we can see the massive volume spikes on these breakouts, showing that Amazon's under massive accumulation so far during this stage 2. But the point is, the buying opportunity was back here, not all the way up here, extended from the 30-week moving average. at a minimum, you would want a secondary buy would be a retest of the 30-week, which happened as recently as the mini panic in August. But besides that, the safe entries are few and far between. Now, I wanted to take a look at some other big gaining markets over the last couple of years, just to reemphasize that point. That if you take a look at the biotech stocks, which are a massive outperformer over the last 4 or 5 years, and people are pretty obsessed with biotech stocks now. But the reason that there's such a huge opportunity was created in biotech stocks is the fact that IBB, the biotech index, based, and a lot of biotech stocks based for years and years and years before they started breaking out in 2010 and 2011 into this massive bull market. So, the opportunity was created from the bear market and basing phase, not from the parabolic move, which, like we keep saying, every time you buy these peaks, you get hurt. So, secondary buy point actually occurred in early 2014 when biotech stocks retested the 30-week, but they went on to move again higher. What's interesting, what's happening right now is that the biotech sector is below the 30-week moving average once again, but it's still trying to overcome the 30-week as resistance so far. So we want to see if this bull market can continue in biotech before it's could be another potential buy point, or this could be kicking off a new stage 4 bear market in this sector. Chipotle is a pretty popular restaurant and stock, and you can see that the big opportunities in Chipotle occurred after the bear market in 2008. For one example, we busted out into a new bull market all the way until mid 2012. Then Chipotle had another mini bear market where it found support, and then the next opportunity was in early 2013. It busted out again into a bull market all the way until the beginning of this year. We had a retest of the 30-week, which was a good buy point in 2014. And Chipotle went on to go up a two-bagger from this bear market low all the way up until recently, and then now we're below the 30-week moving average. So this is either going to set up another buying opportunity for Chipotle, or this is going to be the start of a more terminal decline in Chipotle. I mean, Chipotle is going to kind of trade more with the overall market, but after having such a massive gain over a 6-year period, it's gone up over 10 times. It's hard to find stocks to continue this momentum without consolidating for a long time. A couple more examples, like Facebook, obviously IPO'd with a lot of hoopla, then got cut in half, based out. This whole basing process took about a year, so this whole process really cut the euphoria out of the stock, and then it just went on a massive breakout in 2013. Had a nice retest in early 14, and then even recently has retested that 30-week again and busted higher. So Facebook's been going up for a couple years now since the IPO, and once again the buying opportunities were the major buying opportunity was after this bear market, and the secondary buys were at these retest points. But notice that the gains aren't as big from the retest points as they are from the initial strong buying opportunity. One last example, Netflix. We can see that Netflix based for a long time. Before this massive advance in 2010 and 11, got crushed during a bear market, but then based out and then busted out into a massive like 6-bagger all the way until 2014, and consolidated and crashed below the 30-week twice, and then just like Amazon at the start of this year, ripped higher above the 30-week, and it's gone up. It's basically doubled since the last major breakout point above the 30-week moving average.